Hello, my friends. Brett Patterson here with Iron Gate Global Advisors, coming at you from the financial capital of the West. That, my friends, is Salt Lake City, Utah. Thanks for spending a few minutes of your time today to answer a very important question. We're going to address head-on what the impact the election is going to have on your portfolio. It's a question that I've heard from a lot of clients about. It's a question I've heard from a lot of friends about. People have come to both Brian and I and are asking, well, with the upcoming election, should we sell? Should we move all into cash? Should we short the market? Should we buy gold? You know, all these different things. And so we decided to take a look at history to help determine what you can do. All right? So before we get into that, here's the situation we have. And the reason why this question's being asked so much is because you have two people running for president that are the two most unpopular presidential candidates ever. All right? So that's the situation we have found ourselves in. That's the situation we have to deal with. All right? So what we're hearing in the news and the reason why everybody's asking these questions, should you move into cash, should you move into gold, is because we're hearing a bunch of people come out in the news, and this is from Mark Faber, a famous kind of a pessimist, I would say. He says, given the alternatives, I would vote for Mr. Trump because he may only destroy the U.S. economy, but Hillary Clinton, she'll destroy the whole world. All right, so one destroys the U.S. economy, the other one destroys the whole world, and that's from Mark Faber. This is from Mark Cuban. He's saying, if Donald Trump were elected, I can say with 100% certainty that there is a really good chance we could see a huge correction, meaning market correction. There's a really good chance with 100% certainty, and that's Mark Cuban, right, who's been a pretty vocal anti-Trump guy, but he's saying if he's elected, a huge correction's coming in the market. All right. So the rule number one, with all the stuff that we're hearing in the news and everybody, I think, trying to sell products, you know, investment newsletters, different annuities that are just crap, all sorts of things. They're taking advantage of this election to do just that. Well, the number one rule, anytime politics is involved with market decisions, is you've got to check your political ideology at the door. You got to push it aside, and you got to say, okay, when have we been in this situation before? What's happening? And what impact has it had in the past to the market and ultimately to your portfolio? So a quick heads up as to where we are right now. This was from 538, Nate Silver's group, who does a great job. They have the probability of winning at 75% to Hillary Clinton, 25% to Donald Trump. So you can see right now that the market is pricing in a Hillary victory. And the market hasn't been too concerned about it, right? Because the market loves certainty and it likes knowing what's going on. And right now it believes that Hillary Clinton is going to win. Now, if we see Donald Trump creep up and it's more like 50-50, then there becomes market uncertainty and more volatility. It doesn't mean you sell anything, right? It's just more volatility, frankly, for us to take advantage of in the options market. Well, that's where we stand right now. But looking at history, let's look at what history has to say. And there's different situations, and we're focusing on a 2-year time frame, the election year, and an inauguration year. And the first situation is if a presidency is changed from Republican to Democrat. So if you have a Republican as president and a Democrat's elected, the election year, the market's down slightly. We'll talk about that here more in a moment. But the inauguration year, boom, market flies, right? Up 20 to almost 22%. If it's changed from a Democrat to Republican, you see a positive first year, negative second year. Okay? If, and here's the other situations, if both the presidency and the Congress are changed from Republican to Democrat, so again, Republican to Democrat, you see a down year in the election year, a huge year in the inauguration year, vice versa from Democrat to Republican. It's, you know, positive first year, down second year. So what do we learn from this? Well, the research has shown that Republicans tend to be more business friendly, right? They're more business friendly party. And so when something goes from Republican to Democrat, you know, that first line, Republican to Democrat, that's that third line from Republican to Democrat, that year tends to be down because it's feared that if Democrats take the office, that they're kind of anti-business, and ultimately, that'll be bad for the market, right? That's the thought process. Now, flip that. In the election years, when it goes from Democrat to Republican, in both the second and fourth line, positive years. And that's because, okay, we're moving from a Democrat party that's kind of anti-business to a Republican party that's pro-business. Oh, things are going to be great, right? But it's interesting how the following years on both sides, top line, presidency changed from Republican to Democrat. That second year, that inauguration year, 22%, because people begin to realize, oh, maybe Democrats aren't that bad. Maybe this president doesn't have the power that they thought they had when they were campaigning. All these campaign promises, right? Maybe they can't do that. Flip that. Second line, presidency changed from Democrat to Republican. Positive first year, pro-business thoughts. Second year, oh, maybe they can't do as much as they said, right? So we have really a case of we're giving the president and the soon-to-be president way too much credit for what they're saying on the campaign trails, and ultimately we have a country that is checks and balances, and that's the beautiful thing about the way this country was set up. The president doesn't have that much power as people see that they do. And they put way too much credit. They give way too much credit to the president. And that's learned from history. Pro-business, anti-business. Anti-business to pro-business. Market returns are essentially, doesn't really matter who's president. It matters where the economic cycle is, where things are in the market, how are valuations in the market. Those are the more important things that you have to focus on. Case in point, President Obama's second term, right? In 2012, when he took office, a lot of people thought he's going to destroy the market. He's going to destroy business. He's Democrat. He's kind of anti-business. He's more with government programs and big government and those types of things. Well, the market was in a situation to where it was still, valuations were still very low, and just normal economic cycle. Positive year, up almost 70% in his second term, which is awesome. Those are fantastic returns. And it has less to do with him and more to do with where we are in the economic cycle. So I don't want anybody to be nervous because a certain president is coming into power or may be elected. That's not why you sell. That's not why you buy. You buy because you find a great company that you love, that's trading at great prices, that has great opportunity for growth. And if you need that additional help, contact us. That's what we do. We find those companies and we prevent you from making the mistakes that'll end up biting you in the long term. Relax, my friends. We can take it from here. Contact us with any questions. There's our contact information. We'd love to talk with you. Thanks.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.